Hi.
So you have internet problems,
Yeah, I'm so
James?
sorry. It suddenly got
All
cut. It
right.
suddenly happens.
Okay, how are you then?
I'm,
So
I'm,
everything all right now?
yeah, I'm okay. Uh,
Okay, great.
the price. Normally it's
So
very good.
I know James, you are born in Hong Kong and was raised and educated in London, am I right?
Correct. I was
Okay.
there since I was 7. I did my primary
Mhm.
school, secondary school, university in London. So I'm a London boy. I spend most of my time in London.
Yeah, I can see that. Okay, today I have James here to educate us to buy things that believe will increase in value, such as UK properties or whatsoever. Okay, let's us see if there is any questions. Please leave it a comment box, and we will answer you after James' presentation. Would that be all right? So, without too much delay, I'll pass the screen to you, James.
Okay. See if we could share my screen.
All right.
Okay. Can you see my screen?
Yep.
Right. So yeah, let's start. People always ask me why invest in UK. Different people invest for different reasons, especially if you want to go there and live. Is very different from if you just want to go there and buy a property and just to get a profit from it. So I'm going to talk about what most people talk about very quickly, and we'll talk about the fundamentals, why you should invest in UK compared to investing in other countries as well. So before I start, let's quickly just take a look at the property market in UK right now. As you see from this newspaper headline, Express, we're not talking about
Yes.
Meghan with the royal babies. We talk about the headlines. The house price is increased almost £2,500 as the buyers' demand have reached a record level. So right now, I don't know if you know, UK property market is hot. It's really, really hot. I remember just last month, I tried to bid for 2 property. 2 of them, we couldn't get it. There was 8 people bidding on the same property, and the price kept going up and up, and we couldn't get it. So it has never happened to me that much, but it is secondary market, brand new market are very hot right now.
Mhm.
Yeah, and if you look at last year's price increase, almost every single month there was price increase, and there's nothing special about this unless you look at it. Right then there was a lockdown, and right then there was a recession. They had the biggest drop in GDP ever in history of UK, like 21% drop in 2 quarters, and yet the house price went up. This has never happened before. This has never happened with recession, the house price gone up, but it has happened in UK last year. This is Rightmove. I don't know if you know, Rightmove is one of the biggest portals on the internet about house price, about selling properties. And they say it's the March update have the greatest excess demand in demand over supply for the last 10 years. So the demand is really, really quite a lot. And for the number of potential buyers, it's 34% higher than the same period last year. And with daily visit on Rightmove is over 7 million, which is 40% up from February. So as you can tell with all these numbers, the market is really hot right now. I was talking to a seller. I was talking to him, hey, we are paying cash. Could you give us a discount? He was saying, hey, everybody's paying cash now. It's nothing special. So the market is really, really different now compared to last year or the year before. It's really heating up. It's amazing. So there's billionaires, especially Asian billionaires, they're buying in UK for a long time. A lot of billionaires in Asia, in Hong Kong, they're buying in UK for been a while. Not only in Asia, in Middle East as well. It's famous for it. And our Superman, our Hong Kong Superman, the richest person in Hong Kong, probably the richest person in Asia, I don't know. He's been investing billions and billions of dollars in UK for a long time, at least for 20 years. Last year, he just bought a brewery company for 5.6 billion. And this year, it was announced that they are investing over 6 billion, 7 billion in a development in Dockland, well, opposite Dockland, in the Zone 2 London. It's going to be like a 20-year development. It's amazing, pretty much. I'm sorry, my slide is more geared towards the Hong Kong market, so I have some Chinese in there. Basically, this slide talk about all those billionaires and developers going to UK to develop. I just want to say one thing. And Broadgate, if you take a look at the Broadgate, July the 15th, this is when Lee Ka-shing bought Broadgate. But what's interesting is he sold the Hong Kong property, the center in Hong Kong a few months before that. He sold it for £4 billion. And then a few months later, he bought the Broadgate for £1 billion. So what's interesting is, well, after he bought it, the income he got from the Broadgate, from the property from London, is actually double what he's getting from the property he's getting from Hong Kong on the left. So if you can imagine, if your property have increased in value and you take a quarter of that money and invest in UK, you can double your income. Depends on what property you buy. You can triple or even quadruple your income, of course, depending on what property you want to buy. So what's interesting is that people relocate their assets and they find a better assets or better income assets. And not only billionaires are buying, mothers in Hong Kong are buying. This lady was on the newspaper. She sold her property in Hong Kong. She got 8 million Hong Kong dollars, and she went to bought 5 property in UK as a landlady. And a lot of people are starting this because of the income. Oh, quickly just introduce myself. I've been investing in London over 20 years. I've been doing this for 15 years full-time as a overseas investor, overseas property agent. I've been buying on and off for my clients over about 100 property recently. I also do as a speaker for other developers. And I've been living in UK for over 20 years, so I know a bit about the UK culture. So why invest in UK? You know, if you go to the talks in Hong Kong, almost every single weekend, Friday, Saturday, Sunday, you can go to a talk about UK property in the morning, afternoon, evening, morning, afternoon, evening. And everybody will tell you the same thing. They will talk about, why should we buy right now? The number one thing people talk about is stamp duty holiday. They actually extended it into end of June. Is that a good thing? For some people, yes. But you got to remember, it's only free, it's only zero if you have no property around the world, in the whole world, no property, not just in UK. So does it apply to a lot of people? Not most of my clients. Most of my clients already have properties in Hong Kong or something like that. And so it only goes up to 500,000 anyway. And if you do have property, you still have to pay the 3% stamp duty extra. And of course, we just started a new tax, a new stamp duty, which is the non-resident tax. Some people call it the foreigner's tax. It's actually not a foreigner tax. It's actually a non-resident tax. It started this month, 2% extra. So if you have a property already, if you buy in the UK and you're not living in UK, you probably have to pay 5% extra. And everybody talk about this same thing. The pound and the Hong Kong dollar is historically low. So if you buy it now, so the exchange rate, you probably have a good chance of getting a better deal. So if we look at the chart, you know, starting from 2015, it's basically going down for a while. Last year, the lowest was 8.9. It has increased recently to 10.9. I don't know if you know, rice suddenly have increased a lot. The main reason is the vaccine. People are buying pounds to buy the UK vaccine. That's why the pounds are shooting up for recent months. And historically, historically, if you look at the 50 years of pound against Hong Kong dollars, there's only a few times that has gone under 10. So that's why there's a very high chance an upward gain from the Hong Kong dollars if you're buying at pounds, investing in pounds right now. But it's no guarantee. This is not the fundamental. There's no way you can predict that. But one thing for sure is, this is very interesting, is the Bank of England has the low interest rate. Right now, it's the lowest ever, lowest in the history of Bank of England. Is 0.1%. So is that a good thing? Well, it's a good thing for, definitely. So it's a good thing for investors who want to borrow money in UK. I remember I was doing a talk and the lady was asking me, oh, does that mean I can borrow 0.1% on mortgage? No, that's not true. 0.1% is the interbank lending. Even with a good, very, very good credit record in UK, you have to pay about 3%. Some people pay lower, but 3 to 4% is normal interest rate for buying a property in UK. If you're an overseas investor, you probably pay about 4.5%. But the interest rate is very important because it fuels the cheap money, and people are pouring money into property because it's so cheap. So this increased the property price as well. But it's not exactly the fundamentals. I want to quickly talk to you about the fundamentals of 5 points about why buying the property. But in a nutshell, it's a housing crisis. Not many people talk about that, but if you come from the UK and you listen to the UK news, almost every other week, almost every politician, they talk about the housing crisis. Just Google it and you can tell housing crisis in UK. Almost every newspapers are talking about it. Basically, the demand is way more than the supply. And I will dive deeper into more about that later. Fundamentally, because you have a stable, politically stable, people know what to expect. There's no military coup, there's no wars, relatively stable. So investor likes this. And it also drives the economy. Because of stable politically, the economy is growing steadily, the GDP has been growing steadily. Therefore, it drives investment. It drives investment, it creates jobs. When it creates jobs, the people go to do the jobs and the population increase. The population increase, then the demand for housing is increased. So people have to live somewhere. But the problem is the supply doesn't meet the demand. And so fundamentally, because of the economy, because of the stable politically, therefore the prices are going up. Let's look at the GDP. Of course, the highest GDP in the world is US, and the second is China, and then number 3 is Japan. Number 4 is actually Germany. It's not actually on the chart. Number 5 is UK. UK is this brown line here. As you see, you can't really compare the US and China because the country is so big, there's so many people. But if you talk about GDP per working person, like per capita working, actually UK is one of the highest in the G7 countries. It's a little bit higher than Canada, it's a little bit higher than the US. It's way higher than Italy. So if we talk about per capita for working people, GDP per capita for UK is relatively high. And if you talk about the UK inflation, this is very, very important because investors want to invest in a country where the inflation is low. I hear people talk about developing country, the house price is going 10%, 12% a year. But they never tell you about the inflation. How much is the inflation? Some of the inflation is going up 10%, 15%. Your house price is really going up that much? So for UK inflation, if you take from 1990s all the way down to now, on average is about 2%, 2.2%. So it's relatively low. So that is one of the reasons why politically, economically, we can have a low inflation rate. This will attract investors. Fundamental 2. the steady population growth. This is very, very important because it's not every country the population is growing. Japan is not growing, Italy is not growing, and Germany is going down. Because at the end of the day, when we're investing in property, population is very important. I mean, if no people are living in a property, I don't think we can make much profit in doing the property business. So let's look at the population. Starting from 1971, so it's about 56 million people, and then it gone to 2005, it's gone to 60.4 million, and got to 2018, 66.4 million. So we're steadily increasing along the population growth. And if you look at a longer view, starting from 1951 and all the way down and all the way to 2021, you can tell the population has been increasing. And since 1982, and every single year has been increasing. And they projected by the time you get to 2031, 7 million people will be rich. Yeah, so you can tell the population is increasing, and the prediction of the population is keep growing. And this is a closer picture. So you can tell the projection of the UK population is going to increase along with the traditional line. This is important for property investors who soon want the demand for the houses to increase. Without people, we can't do this business. So compared to the Europe average increase in population is about 0.13%. Germany is 0.33. Italy is actually going down. UK actually have the highest population growth in Europe, so 0.65%. And if you look at the future, the projection is by the time you get to 2050, UK will have the highest population in Europe. Germany will no longer be the biggest population. Italy will be going down, and France will be number 2. So the projection of UK population is going to be increasing. So which is a good thing, which is a healthy thing for us to invest long-term into investment. And I do encourage people to look long-term into property investment in UK. So fundamental 3 is the house price is keep growing. In fact, it's been growing all the way through. Let's look at why. If you look at the demand and supply, the population has been increasing, but the supply has not been increasing with the demand. If you look at the blue area is the local authority, local council, the local government who built. If you look at the 60s and the 70s, a lot of the houses was built by the local government. By the time you get to the 80s and the 90s, hardly any houses are built by the local government. So most of the houses are done by the private enterprise, the developers. You can see the gray area. So this is probably a clearer chart. It shows that the green line on top, the private enterprise are building houses, but they're not really increasing. It's peaked about 18,000 and it's been dropping. It's around about 150,000, 160,000 on average. And social housing, which is like the charities and the NGOs that are building houses, but then instead it hasn't been really increasing. So if you look at this chart, this is probably a clearer chart. So on average, you can tell how much new houses are being built and created through UK since 94 to 2017. You can probably say it's about 150,000 on average, about 150,000. But is that good enough though? Is that enough? If you look at the independent newspaper, this was published a few years ago. So UK is facing the biggest housing shortfall on record, 4 million houses backlog. On every year, they're expecting 340,000 houses per year to meet the needs. So compared to how much houses they're building, the average building about 160,000 to how much houses they need is way different. In fact, the government statistics is in 2007, they wanted 240,000 houses built every single year. Of course, every politician, they come on and say, oh, we're going to do this, we're going to do that, but it has never ever met the target. By the time it got to 2018, their target is 300,000 property built every single year, and it has never ever reached it. On the highest peak that I think they reached was 180,000. So this is one of the reasons demand and supply are not in sync. So housing crisis, this is a political problem. Every politician are talking about, we want to fix the housing crisis. So because of the housing crisis, the house price has peaked, not only in UK, but in Anglo-Saxon areas where people are speaking in English. People in UK are complaining the young people are hard to get onto the housing ladder. It's not just UK, it's New Zealand, Australia, Canada, of course in Hong Kong. Hong Kong, we have the biggest problem of housing. Just want to give you an example. This is actually my first house I bought in UK over 24 years ago, 25 years ago. This is actually in London, Zone 2, less than 5 minutes walk to a tube station, an MTR station. It's a 2-bedroom house. It's an ex-council house. It's actually an ex-government house. It's less than 900 square feet, 2-bedroom. Downstairs, there's a living room and kitchen and a small garden. I bought it for 40,000 25 years ago, about 24 years ago. Angela, how much do you think it's worth now?
Wow, if your location is good, I would
okay,
probably,
it's in Zone 2. It's
yeah.
close to the tube station underground.
Yeah, I think this is definitely increase about 500 to 600%.
So you think it will be like £300,000?
Yes, yes.
Yeah. So I've checked it 6
Wow.
months ago. And from Supla is one of the big portals in UK. So they reckon it's about 535K. Actually, I checked it a few houses down the road within 30-second walk. Some of them are selling to 600,000. So it doesn't matter. We just take the 535 as a figure. Even the 535, that is over 13 times what I paid for 20, 25, 24, 25 years ago. So it's crazy. So price has gone up. When we bought it, we didn't know it was going to go up this much. We just want to buy a cheap property to take a rental. In fact, this house around this area is probably the cheapest house in that area. So the price has gone up crazy.
That's why they say that it's good to go in as early as possible. And the problem is every time each of these inquiries will always say that when is the right time. And they somehow, like you just mentioned, is that holidays, them savings holiday is good for them. It's only for those people who wants to buy. If those people who don't want to buy, it doesn't matter whether they do have these kind of, stamp duties applies,
Exactly.
Precisely, yes.
Yeah, people ask you when's the good time to buy,
Yes.
when you have the money, buy. And if you do it for a long term, you'll never lose. Hold it, don't do what the Hong Kong people do. They sell it, they flip it within 1 year or 2 years. But if you're talking about property in UK, hold it for long term, the price will definitely increase.
Yes.
Plus you get the rental yield as well.
Yeah.
Okay, thank you, Angela. So let's look at a normal scenario. If you look at that from 1952 to 2018, from 1997 to 2017, the property prices have increased 256%. So that is even with 2008, with the financial crash. So that is about 2.5 times. So that is more normal, double every 10 years. So this is more a normal average house price in UK is. So if you look at this chart, it's easier to see from 1959 to 2019. So you can say every 10 years, it doubles. Every 10 years, it doubles. So this is a rule of thumb in UK. If you buy a property, if you hold it, it's doubled probably every 10 years. And this chart will show the different times. It shows from 1850 to 2000 and all the way up to now. But up to 1950, the house price hasn't really been increasing a lot in UK. But starting in 1950, especially in 1960, from 1960 to 1980, 30 years, it has doubled. And from 1980, 30 years, it has tripled in price. So the price is increasing higher and higher, quicker and quicker. So if you hold it long term, the house price is going up. It's very easy to see.
Yes.
So
I think it's best to follow what the ancestor has taught us by early as possible, right?
Yes. My parents, they bought property early and they kept it to now, and they have jumped, many folds. Okay, so look at this. This is the more recent house price list. So you can tell from 2011 up to 2020 right now. So it's basically has been increasing all the way along. Of course, there's been bumps, ups and downs, but generally it has been increasing. And what is the prediction? I've been following Savills for a lot. Savills actually gave a prediction of house price in March this year. And if you look at this chart, there's a lot of sunny sides and a bit of cloud. So this is actually a weather forecast for property from Savills. So if you look at it, there's a lot of sunshine. So let's go down to the bottom. The bottom says the UK. The UK for the next 5 years to 2025, they're projecting 21% increase for the next 5 years. And for 2021, the red arrow is about 4% this year. London, they're expecting 2021 about 2.5% increase. Some people say a little bit higher, but overall 5 years projection, if you look at the top right corner, is 12%, 12.6%. Some part of the country, like the Northwest and the Yorkshire and Humber, is actually they're projecting to be 28% in the next 5 years, 28.8, 28.2. So do you know what cities are in those areas?
Is it because the entry point is much lower? Therefore,
Exactly. This is going to talk about my next slide. So Northwest is probably in Manchester. In Manchester, the price is much lower. And then Yorkshire and Humber, cities like York and Leeds. Yeah, so they are expecting the highest growth there because of the base rates are high, lowest too. And so how about rent? The fundamental is renter growth. Even though the house price is growing, but are people renting them? Are there more and more people renting them? So let's take a look. So this is the projection of UK housing. So if you look at the bottom line, the dark red line, it talks about private rental. How many people in the population are renting? So if you look at 1981 all the way up to 2000, it's about 10%, steady 10%. But when it gets to 2002, 2003, the renting population started increasing from 10% to when you get to 2013, about 20%. So from 10 years, it has doubled, 10% renting into 20% people renting. People call this the generation of renters. So the people renting have actually doubled in 10 years. So the projection is we will reach almost 25% people are renting by the time it gets to 2025. So rest assured, the renters are still around with us for a long time. The people have changed, the culture have changed, the house price is getting more and more expensive, people are renting more. So the renting market are still very easy to rent. For example, my house, we can rent it out like very easily. I remember we put one ad out in London, 20 people will call in one day. That's how easy it is to rent it out. This is the same all across UK for big cities. And if you're talking about how long do they rent for, this is an average in 2018-19. If you talk about less than a year, it's only about 10%. If you talk about people who rent for 20 years is about 8.3%. The highest percentage, actually 25%, is people who rent from 5 to 9 years. I remember my property in London, we had a tenant who rent for 8 years non-stop. So it's definitely, we're in the 25% mark. So people like
so does that mean they, at the end of the day, they offer you, they ask you to sell to them?
No, they didn't actually. They just, he moved jobs, so he moved up north. So they didn't ask me to sell it at all.
I think this is the new generations. When people moving, they follow their work pace. You know, if they go to certain places, they tend to rent it first, and until they really settle down, they think of buying a property near that. Right?
Definitely. And when you marry and have kids, you want to buy a house and settle down. That's probably true. So, and my last fundamental is the rental growth. So there's more, the house price is growing, there's more and more renters, but is the rental increasing is it increasing or is it going down? So let's take a look. So just generally, as Angela, you mentioned before, the house price difference, it gives you a different rental yield. For generally down south, 3 to 4%. If you look at London, London is probably lower, it's probably 2%. That's because London price is way, way more expensive. In the middle part, in the Midlands, like Birmingham, Coventry, is about 5 to 6%. Up north, when you have York, Leeds, and Sunderland, the house price is about 50% cheaper than London. You can get 7 to 8% rental yield. This is gross. So basically, more expensive to property down south, the lower the yield. If so, going up north, the property prices are lower, the yields are higher. So this is the same all over the world, same in Hong Kong, probably the same all over the world. So this is 2019 research, but it's probably about the same still now. Some of the areas you probably never heard of, you can get 8%, 9% easily. But I don't advise you to buy there because just because you can get it doesn't mean there's a renter available. The population is decreasing, the unemployment is high, so just because it looks good doesn't mean it's good to go there. Especially a place called Blackpool. Don't recommend.
Yeah, I wanted to say that too.
So, but Glasgow is relatively good. Glasgow is the price is cheap. The price is increasing, the rent is increasing. Glasgow is actually pretty good. If you look at how low some areas are, most of them is down south in London. If you look at London, WC1, that is central London. That's where the Chinatown is. That is where the Parliament is. And that is, average price is £1.48 million per house. And the yield is about 2.28. And if you net that, it's probably less than 2%. And almost all of it is in the south, except for number 5 and number 6, is all the low yield properties are down south. Yeah. And if you look at the rental growth, how much is growing per year. And this is an average from December 2010 to December 2019. So if you look at the purple line is the UK, excluding London. So it's been above 2% mostly. Sometimes it goes to close to 4%. And if you look at London, the orange line for London, the rental growth has been something like 8-9%, and then it's dropped, it increased to 4-5%. So on an average, on a 10 years average, compounded is about 2.4% year-on-year growth of your rental. So for example, if you're renting a property in 2010 for £1,000, so by the time you get to 2019, so you will expect your rent increase to be £1,270, something like that. If you compound it 2.4% for 10 years. So the rental is actually steady increasing as well. which is good for investors. This is what we want as well. Not only do we want the house price increase, we want the rental also increasing as well. So if you look at it generally, so the house price, the rental in UK, if you look at the top, the UK rental on average is about £886. If you look at this arrow, the green arrow, 5-year growth rate is about 2% on average. And if you talk about time for it to get rented, it's about 17.7 days. That's on average. So if you look at the bottom in London, London is very, very different. It's double the average. It's about £1,641 per month. My property in London, my tiny little house, is actually renting £1,747. It's actually more than average, even though it's such a small house. Of course, the growth on average 5 years is only 1.1% growth a year.
I think it's because, I guess it's because there are more young people working in the city or a place, a big community, a big office in downtown. So therefore, the rental probably can fetch higher. Is that so?
Yes, definitely. It's the demand. People, and especially the new graduates, they want to work downtown, and they want to be where the action is. They want to be with friends. They want to have fun after work. So it's much more convenient for them. So I can summarize. So why invest in UK? So traditionally, UK has a very stable political system, very stable economy. The economy is growing, the GDP is growing steadily, attracting investors all over the world. So the population is increasing due to jobs. In fact, 70% of the population increase is by immigrants. Only 27% are population birthed by UK. And the housing supply is low, it's almost 100-year low, and the population is still increasing for the next 5 years, expecting to be 20%, and the rental yield is continuously increasing since the last 10 years. So this is my conclusion for why I should invest in UK. So this is my opinion, it's not an absolute opinion. The interest rate is also a view to increase in house price in UK, definitely, because there's so much cheap money going on. People will borrow and invest. And also the inflation is relatively stable and low. People will want to invest and put their money in a place in a country where the inflation is also low as well. So these are also the factors.
Yeah, there will be 7 points and plus the 8 points of stamp duty if someone is ready to go in, okay?
Correct, absolutely.
Wow, wonderful. And James, is that lately I have seen a lot of development in West London? Is that regenerations type of development, or there is still plenty of land to develop there?
Well, in all
what do you see in West London?
Definitely, especially in Ealing Park.
Yes, that's what I want to ask you. Yes.
I love that area. I think it's a big potential. If I'm going to buy a new property right now, I will buy a new property in Ealing because I can see tremendous growth there. Not only in the Crossrail, but also in HS2 as well. So it's like a double development going on happening there. Yes. And because it's also a nicer part of area to live.
Yes. There are more greens there, right?
It's quite nice. It's really nice.
Yes.
Not so many tall buildings. I used to live in Docklands, and in Docklands, it's all tall buildings. It's like Manhattan. And I went back to London a few times, and I was saying, will I want to live there in 10 years' time? I thought, if I'm going to live in London again, I'll probably move to Ealing or something like that. Probably a nicer part of UK. A probably nicer part in London, definitely.
Right. That's cool. Yes. Yeah. So let me see. There's any questions? I guess you have given too informative, and there's no question at all.
Oh, that's great.
It's too clear. Well,
So,
I believe that end of the day, I believe that investing in yourself is one of the best possible investment. What do you think? Being
definitely.
yourself, yes, you put yourself into the investments. I mean, if you do have some little bit of extra monies, so there's always, they says that there's always a debate saying that what is savings and what is investment, savings versus investments. People thought all the time that it's good to save, and what is the end of the results after you have saved? Yes, your money is still there, very safe and sound, with the fixed interest there given very low. But when you think of going to a right investment, you probably gain like what you have purchased the last many years. Is that right?
Yes. Of course, savings, as we Asians, we love to
Yes.
save money. But at the end of the day, if you keep it in the bank, you're
Yes.
losing money because the inflation is higher than the interest rate you're getting. So what you're going to do, if you keep your money in the bank, your money is actually decreasing. So how do you grow your money? At least beat the inflation. If you don't beat the inflation, you're
That's right.
losing
Yep.
money. So how do you do this and do it safely? So one of the way is to buy property, because you can get interest rate from it, you can get rental from it, and it will grow slowly. Yeah, definitely.
What would you see that at this current time, like especially last year and right now, people can't fly there, they can't travel there. And do you think that this is one of the factors that people would worry about? I mean, you were in Hong Kong, you've been seeing a lot of investors, you've been attending to all this. Would you think this is not a reasons for people to go in?
Yeah, I have investors waiting for me to go back as soon as I can. They want to go and see properties. So it depends on the type of investor. That investors, they are big spenders. They want to spend millions and millions. So they want to go and check out the property. But a lot of my clients, they buy without actually physically going there. If they want to see property, we can actually arrange for someone to go there and take pictures, to take a video, or even do a live walk around the house and see the property if they want to. So technology wise, we can do a lot of things. You can't smell the house, but you can do you can
Yes,
look at
yes.
it, you can examine it, you can't feel it, but you can ask someone to feel it for you. You can do a lot of things. Yeah.
I think it's the most important is every time when you have your cash ready, don't think this and that, too much of this and that, because they were always saying that. I mean, I've seen people telling me, well, the good things is always we can never chase for it, because at the end of the day, the local will buy it. I say, no, only if you're very ready, only when you're very ready, and you don't need to fly there, you don't have to be time to time, you have to view and touch it, then only you make a sort of affirm whether you want it or not. But if you would have trust the informative or the agents or the professionals who can guide you, who do all the kind of researches for you, I think should be fine. If you have that is kind of sort of ready stuff, that would be a fabulous. I mean, time to time they say that, oh, we can't fly there right now. It's only if it's good, we check around first, and by the time if there is we permit to be fly there, then we will make a decision. I think that is absolutely a big no or wrong. Would you think that so?
Well, it depends. It depends on what kind of property you want to buy.
And what is the price, right? I mean, if you're talking about, yeah.
A client who wants to buy a castle in UK.
Yes.
They want to spend, millions and millions.
Yes, then you probably.
They want to go and look at it.
Yes.
They want to make sure the environment is good for them.
Yes.
That's different types of clients. As I say, majority of the things you want to see, make sure the environment and the area, we can do that for you. We can actually do it live for you. We can do it like in the morning, in the afternoon. We can go there and do it live for you to see the actual area if you want to. But the most important is to get yourself educated. Once you're educated, you feel comfortable in investing. Some of the investors I know who bought from me over and over again, they don't even need to ask me anything. They just ask me the price and ask me, can I get a mortgage? Because they know the area already, because they bought in that area already. They understand because they've been educated. Therefore, they don't have the hesitation. Because majority of hesitation because they don't know. You know, I'm spending my money, all this money to a place I don't know. You know, in Chinese we have say, you know, buy a cow over the mountain. You know, I haven't seen it. You know, that's true, absolutely true. But more you get educated, more you know about what you're doing, more you know about the area, the less this become it's something you have to go over. You know, it's real. You know, people have to hesitate because it's a fear of the unknown. But it's also, if you can educate yourself, this isn't a big unknown.
Yes. I think this time around is definitely a very good opportunity, a very good timing, especially when you talk about the interest rate are pretty low right now. And then if it's for the foreign people who wanted to go in right now, is also with the stamp duty savings, is pretty a good chance, you know. Coming to think about it, if there is no such pandemic, would you think this will be the price entry again?
Definitely. The house price is going up. It's no slowing down, and the renters' demand is increasing. It's not hard to rent it out. Depends on where you buy. Your rental will cover your mortgage. Basically, you're getting your house for free. You know, every month you don't have to put in more money into it. Your rent will cover your mortgage. If that's the case, then it's, you know, the area is okay. You can afford it. Why not? Just build up your portfolio. Start building up. I'm sure you won't regret it looking back in 10 years' time. I'm sure you won't.
Of course, with your such an informative from 1 point to, I would say 5. I was additional another 3 more points that you have added in. You know, that is really very good for everyone to know that. Thank you so much, James, for the time with us. Yes, an excellent sharing. I'm sure everybody will know, and that is very informative. And of course, to make us understand how to propose on or assist your investors on UK's inquiry. At least that is a few points for you to look into it. And for those people who wants to know more about international market, please do tap into the International IQI International Sales page. And of course, Instagrams, or you can contact us at any time. Malaysia, of course, Angela at 016-4427-396. And of course, James will also assist you by any times. James, right? You were right? Definitely. Yes. So thank you so much. And yes, beside that, you can also contact our sales team in Malaysia for any information. So do stay tuned with us on every Wednesday, same time. And till we meet again, James, take care of yourself and stay safe.
Bye-bye.